Since 2003, we've seen a few exits in Vietnam up to now, both full and partial. What do you see, Ken, as in the value of the exits and the number of transactions in Vietnam?
Well, again, if we look at our exit survey, which was the funds that I previously mentioned, they've exited or partially exited from 150 investments, which again is maybe representative of maybe 50% of the market if we talk about non-indirect investment. We're talking purely direct investment. Multiples have been as low as 3 times to as high as 18 plus, and internal rates of return in the 20 to 30% range. But I think average exit multiple has been in the 6 to 8 times.
How's that in comparison to other emerging markets in Asia?
I think this would be the most closely guarded secret, would be the returns data. So I'm just wondering where Ken is getting that from. I'd love to have a look at that. I would say that a lot of it depends on what you call the vintage year in private equity. So it's the year kind of your fund's gone up, and the investments are made. And as they mature, because it's kind of like, it follows like a hockey stick. They call it the J curve. And obviously the vintage curves of 2007 won't be that great, but those in 2009 will be excellent. I think one really has to look at if you had to average it all out, I would imagine that it would be early double digits, high single digits. Yeah.
So with that sort of multiples and IRR, would that make Vietnam a very attractive destination in comparison to others?
Well, all I can say again, based on our quarterly private equity survey, semi-annually, the attractiveness of investing in Vietnam is still high. People are over 50% of the people we survey are increasing their allocation to Vietnam, although it is lower than it has been in previous periods, but still very positive.
Maybe I just add to that some of the data that I see from such as the Preqin reports, where the allocation to the rest of the world, being rest of the world being what is not Europe or the Americas, has been increasing and increasing and increasing, and about half that pie has been going to Asia Pacific. So just based on that shift, Vietnam should get to see more capital commitments. It offers a diversification, it offers growth. A lot of surveys also I see is that as you look beyond the BRIC countries, Vietnam and Indonesia are 2 markets that particularly stand out from all the rest. So it's very good news in that sense.
What about exit methods? What has been the preferred method for Vietnam to date? Listing?
Well, I think initially, if you spoke to private equity fund managers, how are you planning to exit? They'd have said IPO. And I think some of the early exits were certainly IPO. But the majority of exits today and over the last 2 to 3 years, I think, have been really trade sales.
Globally, again, most private equity managers would really like a strategic sale. It's a much cleaner exit. You normally get a higher valuation. It's less legal work, etc.
So you haven't seen a lot of listing or IPO lately as an exit strategy in Vietnam. Is that because of the stock market performance here?
I think it's partly driven by the stock market performance, of course. The markets, when the market was trading at 60 times, stocks were trading at 60 times earnings. It was very compelling to go for an IPO. But
have you actually done any exit with Indochina?
Yes. Indochina is a particular case where the London vehicle, which held the broad fund, invested, listed and unlisted, was taken over during the global financial crisis and is under liquidation. So over the past few months, we've had to do a lot of exits. So, and most of those have been strategic or sellbacks to the company, so sponsors.
What about the average length of investment? I would imagine it would be about 5 years for investment to mature.
On the exits that we've surveyed, it's probably been around 3 to 4 years average, less.
Isn't 3 a very short period of time for investment?
Well, you can probably answer this better than I can, but I mean, in terms of most of the funds are closed end 7 years, take a couple of years to get funds invested, need to start liquidating around year 5, so 3 to 4 is probably on the short side, maybe 5 to 6 would be, you know, more of a norm internationally. Or
yeah, I think it depends on your fund structure. You know, if you're you know, limited partnership, you can have a life up to even 10 years sometimes. But the limited partners, the investors in private equity, are generally investing in a long duration asset class. You know, they want kind of the cycles of their investments to be longer because they have different correlations, you know, to the rest of their other portfolios.
What's your practical experience with Vietnam though? Have you done any 3-year exits?
We've done a number of exits that have been in the portfolio for 3 years. Yeah.
Okay. So the number of exits that you've mentioned can about 150. Were they all very successful exits, would you say?
no. I think fortunately the majority have been very successful.
Right.
But we have seen some investors liquidating investments for different reasons, which would not have given positive returns. So there was, I probably better not mentioning the names, but one investor exited from an investment in a publicly listed company, which has subsequently gone into liquidation. DVD, Vietnam Pharmaceuticals, which we were involved with, and there was a private investor in one of the Petro-Vietnam subsidiaries that sold at a quite one of the Middle East investment funds. I think it was Oman, yeah, that exited at a much lower price than they actually bought in at.
What would be the reasons behind those?
No, you know, I just wanted to add to your point on DVD, which I think is a very interesting case, Vindong Pharmaceutical, because here you had, you know, a Big 4 auditing firm and, you know, one of the leading lawyers in town do the due diligence, go through everything, and yet there was a falsification of documents. So to me, this raises the whole question of, you know, how much comfort do you get in due diligence, you know, and if someone really wants to get away with something, fraud.
Well, being one of the global 6 and not one of the Big 4, but we were actually working with some of the banks. We did an investigative accountant's report on DVD. And I have to say, in my 21 years of life in Vietnam, some of the schemes that they were operating were more creative than I have seen historically.
Let me pick up on that point and move to the challenges that we've got in Vietnam. Obviously, that's one of the challenges. Right. So transparency has always been a big challenge for you all in Vietnam. How are you going to overcome that and protect the investors in Vietnam?
Well, we see it, I mean, we see it a lot with the publicly listed companies, right? You know, they come out with their quarterly or semi-annual results, and then the auditors review those, and there's always a huge number of changes, normally downwards, in the reported profits. So it's really it's a long-term education process, and as well as educating investors about the risks of investing, you've got to educate management in the areas of corporate governance and transparency. And you know, you take a private company and put it in a public domain, it's very, very different. Very, very different in terms of managing that company and what is expected of you in a public market. And we hear a lot of talk about Vietnamese companies wanting to list overseas, but to be honest, I don't think hardly any of them would satisfy the regulatory requirements of a listing in a developed market, which is why, of course, the London AIM market is probably attractive, and some of the regional second boards, because the compliance requirements are not as strict. But when we talk about main boards, very, very difficult to comply.
What's your practical experience with that, with due diligence in Vietnam?
Yeah, no, what I was going to add to this, the whole topic of corporate governance, is I think, we have a very long road ahead of us. We're at the very, very early stages. And, generally you could say that about other countries in Asia as well, And Vietnam is even earlier than, because it's just opened up. And as the system is transforming, I mean, we're just going from, a command economy to a free market economy. And that's going to take, a few generations. If you went out and did a survey and asked, senior management teams and, the boards of various companies, what is corporate governance, define corporate governance, I guarantee you not more than half could answer. I guarantee you. They do not know what the basic principles of corporate governance are. I think they'll have some vague ideas, but the true definitions, the one definition which I see they certainly don't get is the equitable treatment of all shareholders. That is one principle of corporate governance where the majority shareholder and the minority shareholders should be treated equally. And this is one area where we see a lot of, separation and divergence.
Are there any laws and regulations in Vietnam that sort of help to protect the investors in this sense?
Yeah, there are some. There are some in enterprise law. There are some basic protections, such as anti-dilution protection, etc., where you need, supermajority votes for certain things. So I think, built into it, I think there's some basic protections.
Well, there's the supervisory boards that the public companies are meant to have.
Checks and balances there.
So there are, but it's very basic.
Yeah, and it's it's not being really applied, because if you look at who's appointed as the head of, say, I mean, you sit on some audit committees, right? And
well, I attend some audit committee meetings. I don't sit on them.
And supervisory committees, it's normally a friend or a relative. So.
But I think it's this, and a lot of the even listed companies are still very much family controlled, and it's, they still view it as their business, and they commingle funds, they commingle investments, they borrow money, they lend money, and it's not recorded properly. So it's changing the mindset from this is not my company anymore, and I'm accountable to the shareholders, all the shareholders.
That would probably take a few years for Vietnam to evolve in that sense.
I think, Phi, you're probably thinking by now, why are these foreigners coming to Vietnam, being so demanding, telling us how to do things? Well, I'll tell you why, okay? First is the investors.
Speak for yourself first.
The investors demand it, okay? The limited partners who are professional investors, they're putting up capital, they expect a certain, investment approach. They expect a certain level of due diligence, of monitoring, etc. And because they expect it, the fund manager is basically contractually, obligated, to satisfy these requirements. And that is basically kind of the quote-unquote Anglo-Saxon Western style of private equity.
Well, we've got an example of, again, actually a German investor, funnily enough, but where they went into a transaction with virtually little or no due diligence, right, on the strength of a relationship with a local Vietnamese person. And not surprisingly, it's all gone pear-shaped. And, when we asked, why did you do it this way? Why didn't you do proper due diligence? Why didn't you do this? Why didn't you do that? Oh, well, I did it in Thailand that way, and it was quite successful.
Financial or strategic?
No, it was strategic. It was strategic. But I think that people that sit in Europe and America quite often generalise about Asia, and that is a very, very dangerous thing to do, because whilst there are similarities on the surface, the markets are very, very different, and the people are very, very different. And I think, if you don't actually take that into account and do your homework properly, you are potentially setting yourself up for a disaster.
I like that point that you just mentioned. So what is different about Vietnam that you should pay attention to?
It's unique.
So you have to do your due diligence in Vietnam whatsoever?
I think you do have to have to do due diligence wherever you go. But you know, there are differences about Vietnam. Vietnam, the people are, you know, they've embraced the free market economy probably to a larger extent than they should. Right? The definition of free market sometimes gets translated as free for all, and you know, Vietnamese people are very enterprising. They're very creative, as we've seen through some of these schemes and companies that are going into liquidation.
So once a deal is struck and a new entity is formed, do you see any challenges in terms of amendment of licensing or registration of licenses?
Well, generally with private equity, it's a change in the shareholders, and so it's just the registration of the new